Welcome back to Investing Talk Podcast. Today, we're taking a closer look at ZenaTech. They've been making some pretty interesting moves in the drone technology space. You shared some articles about their recent activities, and our job here is to unpack what's important for you to know. We've got info on FAA approval for their agricultural drones, a new wildfire detection system, some acquisitions in land surveying, and their recent direct listing on Nasdaq. Plus, insights into their financials, where they sit in the market, and the drone industry overall. Okay, let's get into this.
Definitely a lot happening with them. It's quite a range of activities, not just sticking to one thing. That FAA Part 137 approval for their ZENA drone, that's quite pivotal.
Right, pivotal how? What does it actually let them do?
Well, it gives them the green light to operate drones for agricultural tasks. Think precision spraying, crop monitoring,
Yeah.
things like that. And it unlocks a really substantial market. We're talking projections of, what, $24 billion globally for agricultural drones by 2032.
24 billion. Wow, okay, that really frames the opportunity.
It does. And getting that approval, it's not just a simple checkbox. It's a rigorous process. It could give ZenaTech a leg up on smaller players who might struggle with those regulatory hurdles.
So it's about getting into a big, profitable market and maybe creating a bit of a moat. Makes sense. But then, as you said, they're not stopping there. This wildfire detection system, that's something else entirely, isn't it? They're testing it in California.
That's right. And the potential impact there is, well, huge. Early wildfire detection could drastically cut down on property damage, obviously save lives, lessen the environmental fallout. It also shows they're thinking bigger than just agriculture. They're looking at environmental monitoring, critical infrastructure perhaps.
Suggests a broader strategy, diversifying their applications.
Exactly. It signals they're not putting all their eggs in one basket.
Yeah.
You have to wonder, though, how does this drone approach compare to, say, existing satellite monitoring? Is it faster, more detailed, more cost-effective?
Good questions. And that theme of broadening out continues with their acquisitions, right? They've bought Miller Land Surveying, and another one's planned.
Correct. And the U.S. drone survey market itself is projected to hit about $2.5 billion by 2033, so another significant space.
How do these survey companies fit in? Is it just about adding revenue streams?
I think it's more about bolstering their drone as a service offering, their BALS platform. They aren't just selling drones. They're aiming to provide a complete package: the drone, the software, the expertise for collecting and analyzing aerial data, often on subscription.
Ah, so buying these firms gives them instant expertise and presumably client lists in that surveying sector.
Precisely. They integrate established know-how. It strengthens their end-to-end solution: drone capture, human analysis, and reporting. They're trying to own more of that value chain.
That makes strategic sense. But then there was also a letter of intent for a workforce scheduling software company that feels a bit left field compared to drones and surveying.
It does seem like a jump initially, but maybe it's about building out a wider suite of software tools. Workforce scheduling is complex. Perhaps they see synergy in helping clients manage the personnel needed for large-scale drone ops, or maybe it's a pure diversification play into enterprise software.
Could be, though you always wonder about focus, right? Spreading too thin versus strategic diversification.
Always a balancing act. Now, add to all this their Nasdaq listing.
Right. They're on the Nasdaq capital market now, and the stock saw a big jump. What was it, 25% on April 24th, likely because of all these announcements.
That seems very plausible. A Nasdaq listing itself, it brings more visibility, more credibility with investors.
And usually easier access to capital down the road, more liquidity.
Generally, yes. The listing itself is a milestone, and that sharp price increase suggests investors really like the sound of this FAA approval, the wildfire system, the acquisitions. It points to optimism about their growth path.
Higher trading volumes probably went along with that spike, too.
Almost certainly. But visibility cuts both ways, doesn't it? More scrutiny comes with being public on a major exchange.
True. Okay, so positive strategic moves, positive market reaction. But then we look at the financials. Revenue was up in 2024, CAD 1.96 million, about 7.4% increase. But losses were also significant. CAD 4.48 million net loss. How does that work?
It's the classic growth stage tech company story, isn't it? They're spending heavily. Think R&D for the AI drones, maybe exploring that quantum computing angle they mentioned, the costs of integrating acquisitions, building out the wildfire system. All that costs money up front.
So investing heavily now for future payoff, even if it means losses in the short term.
That's the bet they're making, and likely what investors are buying into. The key question is when or if those investments turn into sustainable profits.
And their debt-to-equity ratio is 45.4%. Is that high? Low? Concerning.
45.4%. Moderate, I'd say. It means they're financing more with equity than debt, which is generally seen as less risky than being heavily leveraged. But given the losses, you'd still want to watch how effectively they manage that CAD 9.9 million in debt and use it to fuel growth.
And no dividends, which isn't surprising for a company reinvesting everything back into the business.
Typical playbook for this kind of company, yes. Growth now, shareholder returns later, potentially through stock appreciation.
Okay, so strengths. Innovation, diverse markets, weaknesses, regulatory risks, like keeping that FAA approval and competition. How big are those risks?
They're very significant, especially in drones. Regulatory landscapes can change, and losing something like Part 137 approval would be a major blow. And competition is fierce. Lots of players trying to carve out a niche. Staying ahead technologically and pricing competitively is absolutely crucial.
Speaking of competition, they're up against names like Drone Deploy, Precision Hawk. What makes ZenaTech stand out? Potentially, they mention AI drones, quantum computing, sauce.
That combination could be their edge. If their AI makes the drones significantly more autonomous or insightful, that's a differentiator. The quantum computing mention is interesting. It's very forward-looking, maybe focused on processing the huge data sets drones generate much faster or in new ways. Still early days for quantum in most fields, but it shows ambition.
So blending advanced tech like AI with that recurring revenue sauce model.
That's likely the strategy. Build a technological advantage and lock customers in with a service model. Their market cap is still relatively small, around USD 52 million, suggesting the market sees potential but also risk.
And the overall drone market is predicted to just explode, right? From maybe $23 billion in 2024 to nearly $800 billion by 2031.
The projections are astronomical. If ZenaTech executes well, tapping into agriculture, surveying, environmental monitoring, they are positioning themselves in potentially massive growth areas.
So the potential is there, but execution is key.
Absolutely. Strategy is one thing, making it happen profitably is another.
And finally, sentiment. Analysts seem positive on the strategy. Investors clearly reacted well recently, even without specific ratings. Why do we care about sentiment?
Sentiment reflects the market's current belief in the company's story. Positive sentiment can create momentum, attract investment, support the stock price. It suggests the narrative ZenaTech is putting out innovation, expansion is resonating, at least for now. But sentiment can be fickle. It needs to be backed up by results eventually.
Understood. So it's a piece of the puzzle, but not the whole picture. Okay, so wrapping up our look at ZenaTech. It's clearly a company with big ambitions. They're moving fast, expanding into key drone markets like agriculture, surveying, even wildfire detection. The FAA nod, the acquisitions, the Nasdaq listing, these are positive signals.
But you have to weigh that against the financial picture. Growing revenue is good, but the losses are significant, driven by heavy investment. And the competitive regulatory environment isn't easy.
The recent stock surge shows the market is excited by the strategy for now. But as always, you need to keep digging, watch their performance, see how the industry evolves.
Which brings up that key question, really. How will ZenaTech manage this tightrope walk between pushing for aggressive growth and actually achieving profitability, especially in such a fast-moving tech space?
That really is the core challenge for them going forward. We definitely encourage you to check out their investor relations materials if you're interested and keep an eye on developments. And if you found this exploration useful, please do subscribe, like this, and leave us a comment. Let us know what other companies or market trends you'd like us to look into next time.